Is there a way to notice that a trend line is going to break before it actually does? I want to enter a sell position at these points before a big trend starts. Is that even possible? Hello, I'm Tradiology. In this video, I want to give you a complete and precise answer to this important question. I'd really appreciate it if you subscribe to my channel and hit the bell icon before watching the video. Alright, let's go to the chart because we have a very important lesson ahead. Imagine the price is moving gently and smoothly upward. In such trends, what should we do? We can enter a buy position at the lows when we see proper setups until the trend line's top, and at the tops, we sell down to the trend line's bottom. But it's not always going to go up. Eventually, the trend will reverse. Now I want to examine where average traders realize the trend has reversed, and how professional traders detect earlier that the trend line is likely to break, and the trend will reverse. Okay, beginner and semi-professional traders have a trend line, and wait for one or two strong full-body candles to form. Then they realize the trend is probably reversing. This method is completely correct and has no issues. It can be very profitable. But I want to teach a method for those who are curious and want to know how to detect trend reversals earlier. I gave a brief explanation in one of the previous videos, but here I want to go into more detail. Always start by drawing your trend line. A trend line performs one very important task that it's known for: creating higher highs. I consider the validity of a trend line based on creating higher highs and higher lows. So if, in this area, the price touches the trend line and reaches a point but then moves down, know that the trend line is starting to show weakness. Because as I said, the credibility and honor of a trend line lie in creating higher highs. What happened in this area? What I see is a very nice engulfing candle. In candlestick patterns, I only recognize two that are valid. I have no interest in other patterns. The first is the pin bar, and the second is the engulfing candle. These two are the best and strongest price action patterns. So when an engulfing pattern forms in this area, I understand that the trend line is very likely to break, and based on this pattern, you can enter a sell trade and set your targets based on the levels you draw. But there are some very important points that you must absolutely follow before taking this trade. The first important point is that the chart you are looking at should belong to the same time frame, meaning the way you view the chart should not display too many candles in one time frame. If you are seeing the chart like this view is more suitable for higher time frames. To view the chart in its proper scale, you should look at it like this. This scale is correct for this time frame, and our perspective of the chart will be accurate and properly scaled. If you see the engulfing candle at this scale, it becomes much more valuable. I hope you understood what I mean. If not, no problem. I'll explain it again in the future. The next very important point is that when you want to sell in this area, you must have a valid level there. This level gives a lot of credibility and incredible power to this entry method, and increases the strength of this strategy a lot. Now let's go to the next example, which is the opposite of the previous one. In this example, I want to apply the previous points step by step. Step 1 is to draw a trend line. Step 2 is if we are looking at the chart in the wrong scale, or we are too zoomed in, we should consciously fix the zoom and look at the chart in the correct way. The next step is that if we see any particular level in these areas, we draw it, because that level gives us the perspective that if there is going to be a counter-trend position, one of the important places is definitely this level. Our next step is to wait in this area for the price to touch the trend line and reach down to these areas, and wait for our golden pattern. With this beautiful pattern, you can enter a buy trade, hoping that the trend line is likely to break, and the price will move upward. Let me quickly summarize what I did, so everything becomes clear, and you understand. Because in trading, the topics are practical and need to be reviewed several times. We must pay attention to the correct scale, a good level, and a good candle for trade entry. Definitely wait to see a higher low after touching the trend line, and then wait for the engulfing candle. Look at the next example. In this one, we have an upward trend. We're careful to keep the chart properly scaled, not too zoomed in, not too zoomed out. Always follow logic and moderation. We see that there is indeed an important level ahead of us. Now, we are just waiting to see the price touch the trend line and come up to this area and form an engulfing pattern. If we see this pattern, we can enter a sell trade, and in my opinion, the stop loss should be placed above this high. Take profit levels should be figured out by backtesting. You can place multiple take profit levels, or you can close the entire trade at one specific level. The most important thing is to practice and backtest this trading method. The more you practice, the more skilled you become, and your eyes will get used to spotting it. Okay, thank you so much for staying with me until the end of this video. Again, I ask you to practice these tutorials. If you liked the video, please hit the like button and subscribe to my channel so you won't miss the next lessons.